Well, it's time now to turn our attention to some corporate action over in Kenya. Sasini, one of the country's leading tea and coffee producers, announced this morning that it was profitable in the fiscal year of 2009. The group posting a profit after tax of 137.2 million shillings compared to a 13.4 million shilling loss, which was recorded last year. So overall positive, but the market reaction has been pretty muted, given that there are still major risks that present themselves to the business moving forward. Joining me now to get into the company and its business case at the moment is Caesar Mwangi. He's the MD of Sasini Tea. Thanks so much, Caesar, for joining us this afternoon. Let's go through, first of all, major contributors to the turnaround we've seen for Sasini Tea.
Yeah, thank you very much. I'm pleased to be here. The major contributors to the turnaround for Sasini Tea and coffee was really the increased volumes of production and sales in both our tea and coffee divisions. In the previous year, the volumes were affected because of the post-election violence, especially in our tea division. And we therefore found the previous year had a drop of approximately 30% in expected production. This year we did not have that kind of disruption, and therefore we saw that increased sales volumes going right through the bottom line. The second aspect that also affected us was that we experienced a weakening of the Kenya shilling compared to the previous year. There was an average, the exchange rate of the Kenya shilling to the dollar, because we are an export-led business, there was an average increase from approximately 67 shillings to the US dollar to about 77 to the US dollar. And this weakening of the Kenya shilling really helped our business improve. And those are the two main factors that actually contributed to this improvement. But we also had an enhancement in our operational efficiencies, whereby we put in measures to ensure that we try and operate as best as possible and improve the efficiencies that we had.
Well, certainly impressive, Cesar. I mean, moving from, as I said, a loss position to a profitable one. But there are still concerns out there pertaining specifically to your export operations. So let's take a look at that, where Sasini relies quite heavily on export capabilities. What's your view on your reliance there and its ability to actually sustain the business moving forward?
Yeah, we are relying on our export. The bulk of our business is actually export oriented. And I'd just like to add also that the tea prices were very favorable in the year ending September 30th, 2009. Now, the question of sustainability moving forward, one of the things we've realized is increasingly our products, we were a little bit worried that our products may lose some of the demand that they have because of the global financial crisis and the drops in income in our foreign markets. But what we're increasingly realizing is that we have got products that are actually income inelastic, and they're not really affected so much by the incomes of the consumers in the foreign markets that we export to. So we're finding that we are able to weather the storm, and the export business is still fairly good for us based on the basic nature of our products, which are really necessary products for most consumers.
As you mentioned, though, the risk that prevails is that stronger and that strengthening shilling, because it is a forex risk that presents itself. Any inroads in that regard then being made with regards to tapping into the local market specifically?
Yes. In fact, you've hit the nail on the head. We have diversified our business. Two of the main areas where we are generating extra sources of income is on the domestic value-added tea and coffee market, where we've got our products now in the market, and we are pushing this particular line of business. And we've also got our coffee milling operation, which is approximately 3 years old. And we are generating quite a good amount, a reasonable amount of business on the coffee milling, and we hope to expand that in the future to generate more income locally. So we are moving away from the pure export of the commodity to the value added locally, and also to the coffee milling business locally.
What's interesting is that then puts to the to the forefront two sides of your business, because the one where tea prices really are good for the core, increased tea prices are good for the core. If you look at your value-added activities, it's possibly a threat where your high tea prices continue to impact negatively on the performance of your retail products. So how are you looking at mitigating some of that risk? Because of course tea prices are something that is not entirely within your control.
Yeah, in fact, it's a balancing act. Fortunately, right now, our domestic value-added tea market is fairly small in the overall scheme of things. But as it grows, we will really have to manage we'll really have to manage the different effects. On the export side, what is favorable for the exports will be unfavorable for the domestic market. But what we feel we will need to do is increase probably apart from the domestic market, is will increase our value-added sales in the region. And this is another possibility that we are looking at. But also, we've got the smaller business of value-added teas and coffees in our Savannah coffee lounges. And we're hoping also to grow this particular business segment where we're going to be able to generate an extra income also from the domestic consumption of our tea and coffee products in our own coffee lounges. Presently, we have 4 Savannah coffee lounges, and we are saying we are one of the very few companies that takes the product from the farm right into the cup. So we are taking certain initiatives to try and mitigate that foreign exchange risk.
Well, certainly a diversification strategy that seems to be holding you in good stead. Caesar Mwangi,
yes.
thanks so much for
yes.
having joined us this afternoon.